Welcome back. We had a big rout in global equities overnight. The US indices were down 2 to 3%. European indices slipped 3 to 3.5%. To some extent, the Indian markets preempted the fall. Yesterday, the Nifty and the Sensex were down about 1.5%. But this morning, the SGX Nifty is suggesting that it still could be a lower start. So that said, the cut on the SGX Nifty has narrowed. Maybe an hour back, the SGX Nifty was lower by 60-odd points. Anuj is here to fill us in on how he's viewing the trade setup now. Hi, Anuj.
Hi, Rima. So, not to a large extent, actually to almost every extent, we had preempted the US decline between 230 and 330 yesterday. I mean, the way market collapsed yesterday, 230 to 330 was almost a near breakdown. It was a bit of a reality check for US market. I mean, did make this point yesterday as well, that the US market reaction previous day was quite mild compared to the hawkishness of the US Fed. So I think yesterday was perhaps more of a mature reaction. But look, this is not about day trade, which could work out either way. This is about whether the US market has started a sharper correction led by the NASDAQ, and will India stay decoupled from the US? I think that is the bigger call that one needs to take here. I mean, if you look at the trade setup, it's clear that a lot of market participants were thrown off guard yesterday, and this is the problem of a market which is not hedged. Yesterday the market was completely on the long side, and yesterday was a shakeout. If you see the index futures, they were selling, the premium came down, the long short, if you see, has come down to 54% now, and the put call ratio has fallen to 0.88. Now at some point during the day today, the market will become oversold if the selling continues. Maybe that's where you see some buying. But for a positional point of view, the fact that the Nifty effortlessly closed below the 20-day exponential moving average now tells you that it's sell on rally till that 20-day exponential moving average is reclaimed, which is now somewhere around 18,490, 18,500. And it's possible that you test the 50-day exponential moving average, which is somewhere around 18,194 on the Nifty. But it's possible that you see an intraday rally if after the first hour you protect the decline and the first hour low hold. So intraday rally is possible, but that will be vulnerable to be sold into somewhere around 2 to 30 when US futures, my senses, again would start to show you red. The Bank Nifty is the index to track because that's remained the strongest index. It closed below the nearest moving average, the 10-day exponential moving average yesterday. But it's still an index where you would want to give benefit of doubt because yesterday was expiry as well. So maybe if the market has to recover, the Bank Nifty has to put its hand up because IT will struggle. So the Bank Nifty's larger trend still remains buy on dips. But overall, the yesterday's red bar clearly is a big one and something that you should give importance to.
All right, Anuj, thanks very much for that. So that's basically the setup as Anuj sees it. Well, the next corporate we are speaking with is Nava.